Hello and welcome to Business Today's pre-budget special coverage, Modinomics 2025. I am Siddharth Zarabi, and on the show today, the fine balance between budget spending and fiscal responsibility. We also have on the table the urgency of boosting one of the most critical sectors, one that creates the maximum number of jobs and accounts for a lion's share of exports and is also one of the biggest cogs in the Make in India machine, that is the MSME sector. And joining me on this discussion is a panel comprising Vinod Sharma, Chairman of the CII National Committee on Electronics Manufacturing and the Managing Director of Deki Electronics. We also have with us Ashok Sehgal, the Co-Chairman of the CII National MSME Council and MD of Frontier Technology, and Adil Shetty, CEO, Bank Bazaar, one of the most well-known executives, CEOs in this space, is also with us. As we go into the discussion, I just want to bring up one of the key data points that has come up just at this point of time, and this is the latest report from Moody's Analytics for the year 2025, and it says that the economy is likely to slow further in the current year with the GDP growth estimated at 6.4%. The report says strong inflationary pressures will exist in India, and a depreciating currency, the Indian rupee, will add to input costs. Domestic demand, which has already been moderating, will continue to hurt the economy. And one of the most important things, and this is the possibility of import tariffs by the United States against various countries, including India, could hurt overall export demand. And with high interest rates that have prevailed so far, curbing demand, there can be an impact on investment. Although there is very clearly, according to Moody's Analytics, expectation of 25 basis points interest rate cut in April, and expected budgetary measures and possibly monetary policy measures also to support the Indian economy. So just one of the latest estimates as far as how the Indian economy is likely to perform, and clearly the budget is presented with several macroeconomic, external and domestic pressures to focus on. But let me turn our attention to our panel and come to you, Vinod. One of the key drivers in the recent past of our economy, the Make in India effort, exports, as well as job creation, is the electronics sector. There are PLI schemes, there have been other initiatives at the central and the state level. What do you think is required at this stage to further push growth in this very vital sector, reduce import dependence, and continue to create good, sustainable jobs?
Thank you, Siddharth. What your report said about economy slowing down is something we felt in the Q3 of this financial year. Electronics has been, let's say, someone who's been an outlier thanks to a lot of very bold policy initiatives by the government of the day. We have seen that electronics today has become the second largest merchandise export item after, of course, oil. And we believe that this momentum will continue if we're able to do a few things right. Mobile phone, the success that we see in assembly of mobile phones in India so far, you will recall, is based on two main policies. One is a import duty of 20% on mobile phones, which used to be zero earlier, and later on was reduced now, last budget, to 15%. And the second was this PLI of between 4 and 6% on the manufacturing or production or assembly of mobile phones. What we need to do next, which is very obvious, this thing is in order to be even able to sustain this assembly, we need to do manufacturing, deep manufacturing, value-added manufacturing of all the components that go into this, on not only mobile phones, but all electronics. And we know that electronics is an area that, from just $20 billion of manufacturing just 6 years ago, we have now come to almost $115, $120 billion. So we've seen like a six-fold growth in the last 7 or 8 years. We hope to be able to repeat this, but there are a few things that we will have to do slightly different from what we've been doing so far. Also, I would add that if there were a volatility index across the world, we are probably at the most volatile time that we remember, well recall in the last few decades.
Right.
And hence, I think we need to dig a little deeper, in my opinion, and make some fundamental corrections, which I'll be happy to list out in, when you ask me the next question.
Sure. Ashok, I come to you with that very same point to take the discussion forward, because I want to keep Adil at the end of this first round so that he can give us a financial industry perspective on consumer demand and growth. But Ashok, over to you. What's the key thing that you are really expecting as far as the MSME sector is concerned from the forthcoming budget?
Thank you, Siddharth. I think the main thing we want to project to the government is that please continue to have faith in industry and MSME in particular. Let's not get worried about some of these points which Moody's has correctly pointed out, which is what could happen with US tariffs coming in, what could happen with a small inflation, with a little bit increase in inflation, what could happen with reduction in the depreciating value of the rupee. Because I think MSMEs, by and large, are benefiting from a lot of government policies, which include support in many ways. And I think the most important amongst that is something which has been sort of touched upon by Mr. Vinod Sharma, which is that whereas the electronic sector, as an example, went in with PLI for the big people, that is now moving downstream. So I think this trickle down effect into the lower rungs of the supply chain is what is crucial, and we hope the government will continue to add and believe in MSMEs as being the supply chain for the growth of the country as a whole. I think we want that they should continue to incentivize MSMEs by making easier access to finance. I think MSMEs also suffer from a higher rate of interest compared to large corporates, and that affects both their domestic viability and also particularly their export viability. The equalization of interest rates for deserving MSMEs, and I don't mean just giving away free financial support to all MSMEs. There must be an equalization of interest rates domestically between the large corporates and the MSMEs, perhaps through some subvention schemes. And especially for export business of MSMEs, there must be an interest subvention because the differential in interest rates between India and Europe or the US is very, very large. So this availability of finance and finance at reasonable rates is very important. The other thing we want the government to do is to continue to spend, because MSMEs, at the end of it, largely supply within the country and directly or indirectly to the government as part of the supply chain of the large corporates that do direct business with the government. So these are our major hopes and expectations from the upcoming budget.
Adil, I'm coming to you. For your perspective on the state of the economy, really, because when consumers come to your marketplace, online marketplace, you get a sense of what they are looking for and what consumer appetite, discretionary, non-discretionary spending is like. What's your sense of what really is happening as far as consumer spending, appetite and demand is concerned?
So, Siddharth, like you rightly pointed out, there's a need to get more money in consumers' hands so that consumption can increase, so they can buy products from, MSMEs. There are a few things I feel we're looking forward to, and which consumers at Bank Bazaar are saying they're looking forward to in the budget. So one is inflation has affected everyone. The last time the 15 lakh 30% tax slab was set in the new regime, right, was in 2020. Now we're 21% up in terms of inflation. So we need a reset of that slab to 18 lakhs. When we set the tax-free limit or income of 7.5 lakhs to which you don't pay tax, that needs to be re-looked at, including increasing the slabs. So can that number be 10 lakhs, right? And we've also seen tax-saving instruments like ELSS. And in our aspiration index Bank Bazaar survey, term life insurance coverage is not increasing as fast as we want. Can we create a deduction, just a standard 30% deduction in the new tax regime so people get more money in their hand? So I think what we see is here's an opportunity wherein to get consumption going, given the tax buoyancy, if the government can trade off between the increase we've seen in tax collection, get more people, get more money in people's hands, get them excited saying, even if your salary hike was not so much, at least you have more money in hand because there's now lower income tax, and get them to start consuming, right? We think that could help the MSME, Siddharth.
Adil, one quick follow-up. By all accounts, the trend in the last few years, of course, we saw that big corporate tax announcement in September 2019, which was an out-of-budget move. That was allowed to end, and there is also a demand on that side. But since you focused on personal income tax, don't you think that the government may rather opt for a near zero new tax regime push rather than incentivizing the old regime? I wonder if you have thoughts on that, and if that will prove to be going down that path, continuing to go down that path will be counterproductive at this stage.
No, you're absolutely right. Last year was an inflection point between the old and the new regime. So for the first point, mathematically, you could show that a salaried individual would save more tax on the new regime than the old regime. And Siddharth, the really amazing thing is people got it instantly. So last year, 72% of people went under the new regime. So they understood when the coin flipped, right? So what I'm talking about, right, is in the new regime, last year standard deduction was increased from 50,000 to 75,000. A deduction was provided for NPS. So clearly the concept of deduction and basic exemption exists in the new regime. Now I'm saying let's not overcomplicate it, right? So let's not say that we want 50,000 for insurance, 1 lakh for home loan. Let's just say for a gross of up to 15 lakhs, 30%, if you bought all these products, 5 lakhs you can claim as a deduction. And the reason I'm saying that, right, is look at ELSS AUM. Mutual funds are obviously doing very well, right? 30% growth in AUM. But ELSS is not growing, right? Term life needs to grow much faster. So pick a few products that you know are very good, right? Like an ELSS, like a term life, like an NPS, and just create one flat, simple deduction in the new regime. I know it's a little forward-looking and a little innovative, but we feel that keep it simple, but we need people to be going into term insurance. We need people to be doing mutual funds, ELSS with the lock-in. So consider bringing this in the new regime.
Okay, let me go back to my guests. Vinod, I come to you. I want to pick up that one point that has been an issue for MSMEs across sectors, not just in one particular sector, and this is timely payments from government procurers and large private sector corporate entities, and some interventions and announcements have happened in this regard in the past. Has that situation materially improved, or are we still sort of on the same level?
Now, it's a very important point you pick. So to answer your question, yes, we've seen some improvement of late, and some of the threads and a few other policies about the 45-day payment have helped to some extent. But I think, again, time for a fundamental correction. So you see, if you, it's the large companies that deal directly with consumers. And as consumers, we pay for everything in cash. There is almost nothing you can buy in credit, right? Unless we are helped by an agency in that loan. Now, if they are getting cash paid for their material, and we are the ones who are actually giving them a more extended credit in the B2B MSME business we do, in a way, the entire working capital is actually being funded by small companies. And as Mr. Ashok pointed out a little earlier, the cost of that capital for smaller companies will always be higher than that for large companies. So I think a fundamental correction is required there, either in terms of an interest equalization, etc. Number two, there is a very good practice that I saw, a best practice you could say, that our own GEM platform, the government e-marketplace has. So if I bid for something, and if my bid is accepted, I found to my delight, one of the government buyers actually was flagged in red color, and there was a warning on the GEM platform saying, look, this customer has not paid the earlier vendor on time, so whatever transaction you're doing with him is at your risk. So in the least, I think if we are able to flag areas like this very openly and transparently, that would also help bring down the risk for SMEs. and hopefully also the credits available to the SMEs will then go up. So I think we need to make some fundamental corrections like that. I mean, in this country, unfortunately, even today, a check bouncing case that an MSME has to fight with a large company can take anywhere up to a few years, if not longer. Along with the physical infrastructure, the point I'm making is that the whole infrastructure, the economic infrastructure, should be one where the risks are not really all against the MSME player, and some of them are loaded a little more in terms of the large buyers, whether it's government or private sector.
Ashok, how underappreciated is the point regarding logistics? A lot has improved in the recent years, but clearly a lot more needs to happen, because when one speaks with industry, they still talk about various bottlenecks when it comes to logistics, either procurement, dispatch, and the overall distribution network. Is this also a pain point which is perhaps underappreciated in the headlines?
Yeah, I think that's a good point you have raised, because logistics costs are generally acknowledged to be higher in India than other places. But there are several factors. One is the fact that the logistics costs are high. The other is the uncertainty of the logistics in the Indian scenario. So when you're getting incoming materials or you're having outgoing materials, there is no certainty. You may place an order, your supplier will say he has dispatched. You cannot trace and track that consignment to know when it will reach you. Given that today we have such a system of data available, both with the logistic companies as well as through the e-way bills, it would be good if there could be more certainty on that count. The other side, which is very relevant, is the export side. And as you know, MSMEs, especially the good MSMEs with good growth potential, do rely on their exports as a major area where they have regular business, good payment terms or assured payment terms, and frequently good profits. And I think this is an important area for the country as a whole. Now, what happens there is that the units which are located near the ports are okay. But if you look at units which are located far away from the port of export, the cost of inland haulage is very high compared to the amount of charges from going from India to Europe or India to the US. The
Okay.
domestic haulage from a place like, let's say, Punjab or UP to a port on the west coast is very, very high. It can be as much as equal to, for a container, almost 60 to 70% of the cost of shipping that container from India to Europe. Now, I think that is somewhat unreasonable. The other thing, as I mentioned, is the time taken for that shipment to reach from the inland location to the port and actually get exported.
Okay.
So these logistics costs is something which both for domestic and especially for export is something which can benefit a lot from the government actions. I
Okay.
think in this regard, the railways, which once upon a time used to be important transporters, are certainly falling behind, and it would be good if they could pay enough attention to this, because I understand that freight earnings are more important to them than passenger earnings. But the system improvements in handling freight have not been commensurate with the improvements you've seen in handling passenger traffic. So that's a major area of improvement, and I'm sure the railways improve. It'll force the truck operators and the other operators to also look at their efficiencies in logistics and improve their costs and their efficiencies.
Adil, coming to you, and this is a point you've referred to earlier, and we were talking about physical infrastructure and physical bottlenecks. But one of the things that has worked for India over the recent past is our digital public infrastructure. Very clearly, one of the better ones in the world, and lots of improvements that continue to happen. What should be done there? Because very clearly for smaller companies, the digital route, the online route is a easier path to having their balance sheets in good shape.
Absolutely, Siddharth. We talk about 11.11 lakh crores for physical infra. I feel a similar kind of language needs to be used for digital infra. And sometimes people ask me saying that physical infra, you hire so many people, you build a road, you build a bridge. Are you going to create jobs with digital infra? But Siddharth, look at UPI, right? Vinod was talking about this earlier. How many merchants are getting cash instantly in their bank account, earning interest on it because of that data, being able to get access to a loan? It's truly revolutionizing, the entire MSME ecosystem, electronic payments in India. So I think we have asks in terms of digital infra, and this will really help MSMEs. We have two great stacks in India. One is called DigiLocker. About 200 million Indians are storing their PAN card, their driver's license in DigiLocker. And we have account aggregator. 800 million Indians have their bank accounts on account aggregator to share in order to get access to credit. These two systems can be opened up for MSMEs. So a current account is available, so they can share their ROC certificates. This will improve access to credit for to help them grow. We have video KYC today. It's incredible. Like we're on a call today, right? We can service a retail consumer in any of India's 19,000 PIN codes, digitally verifying them on a video. But we can't do the same thing for MSMEs. Can we enable non-face-to-face video KYC for MSMEs? I truly believe, right, in the MSME sector, like we've seen the other speakers play, innovation is going to be key. If we can build great digital infra for MSMEs, and we use the 1 lakh crore fund the FM spoke about in the last budget, interest-free loans, right? What are startups at the end of the day? Startups are MSMEs too. And look at what DeepSeek has done, right? 40 crores, and they've built a challenger, which they're saying now is as good as ChatGPT. So I think MSMEs in India can really innovate, and we've got to build policy, right, where we talk about innovation as the bedrock of our MSME sector.
Absolutely, Adil, and every time I meet with people in industry, people like you, and when we have conversations around MSMEs, I'm continuously reminded of the German industrial powerhouse and its entire base on small and medium-sized companies. One final point, I just have a couple of minutes left on the show. Vinod, to you, it's not a budgetary matter, but clearly the indirect tax side and the GST is also part of the overall issues that we discuss. Left to you, what would you mention as the single most important thing that is required in terms of improvement of GST with respect to your sector?
I think there is one area, for example, if you look at electric vehicles, while the electric vehicle GST is at 5%, all the components are still at 18 or 28%. Just to flag one, so there are some areas of correction required. Having said that, I think the GST kind of thinking, which is where states and center came together and created a mechanism that at least can take decisions together as federal states, that needs to happen also for the entire manufacturing space. So if you look at issues of land, for industrial land, if you look at issues of labor, all the labor codes are still pending to be implemented. Issues around electricity, which is a completely, there is no manufacturing without electricity, and electricity is a monopolized state subject, so each state treats it differently. Issues of logistics to a large extent. I think we need to create our CII ask in the budget is to create an empowered group of ministers, both from center and state and maybe secretaries, who can take a look at these very key factors of production if India has to become a global factory and to some extent gain from that China plus one opportunity. So it's not only indirect taxes, I would say the same for some of the customs duties. In some cases, the components are the duties are higher than those on finished goods. So I think a lot of that streamlining is required. One in-depth look at all this to make sure that manufacturing in India finally becomes easier than even trading. The moment we do that, I think a lot of this balancing between jobs, economic growth, and fiscal prudency will automatically happen, in my opinion.
Ashok, you want to take that point forward, particularly the one manufacturing becomes easier than trading as closing comments on the show?
I think that is a very, very interesting slogan Vinod has mentioned. And the day you see a trading entity has so few compliances it must meet, so few licenses it needs to get started, And that is something which manufacturing is suffering from. And for an MSME to cope with the whole plethora of 637 compliances and so many approvals and the renewal of those approvals, that is a constraint which must be removed. And then similarly, the import of materials for inputs that requires production. That must be made easy. There are far too many complications on import of inputs. There are far too many compliances and time lost. And there are far too many inspections or rather penalties against violation inspection that need to be simplified.
Right.
All these things don't apply to traders and should not apply to manufacturing. Then manufacturing can be as vibrant and quick as trading.
It's interesting that our guests on the show brought this up because I was at the World Economic Forum in Davos and there was much hand wringing when it comes to Europe and European companies who complain about over regulation in the European context, which is stifling innovation and productivity across that continent. And there were comparisons being made with the likely strategy of the United States of America. Donald Trump seems to have picked a leaf from Prime Minister Narendra Modi. Make in India is now Make in America. In this context, I think it would also behove our policy makers perhaps to take a leaf out of that booklet and slash and burn many of these restrictions, rules and regulations that tie the hands of our MSME entrepreneurs and do not allow them to grow productivity, grow jobs and benefit the Indian economy. With that hope, I thank all my guests on the panel and you, the viewer. We'll be back with more in our continuing coverage in the run-up to the budget. Until then, goodbye.